Hey, it's Mike Lynch with AmeriFirst Financial, and it's Monday morning time for your Monday morning mortgage update for the week of December the 19th, heading into Christmas. I hope everybody had a fantastic weekend. Galen had a great weekend. I think we finished up all of our Christmas parties, had family game night, clam chowder. I won the game, by the way, so I am the champion, and had a great Sunday evening at Pathway Church. Their Christmas show was off the charts. So hope everybody's having or had a great weekend. Let's talk about what happened last week and what's happening in the coming week. So last week, we actually had the Federal Reserve meet. We know that. I talked about it last week, and they raised their federal fund rate 0.5%. We all expected it, but actually mortgage rates got better. So let's go right to the chart. I want to show you this. This is, as we know, the trading in mortgage-backed securities in the bond market represents that. The green means money's flowing into the bond market. Red means money's flowing out of the bond market. As we see the green, that means rates are getting better. So, wow, a lot of green over the last month, hasn't there been? This last big bar here on November the 10th was when the Fed raised the rates in November by 0.75 of a point. And when that green bar shows up, that means money flowed into the bond market and mortgage rates actually went down. They improved. And then we rode this nice wave of great rates up until last week, where my cursor is here, where the Federal Reserve met again. They actually raised the Fed fund rate 0.5 point. And as I predicted, rates would actually get better. They did a little bit, but they got better. Did they get as good as they got at the last one? No. But what we're starting to see is a trend of mortgage rates getting better, because this raising of that Fed fund rate, what's it do? It lowers inflation, and lowering inflation means mortgage rates get better. The Federal Reserve is fighting inflation. They're willing to take the tough choices, raise that Fed fund rate to fight inflation. And that's the way the market actually read this. This is a good sign that pain's ahead. Tougher times are ahead economically is the expectation, but it's going to start curbing inflation. So not only did the Fed do this, but they also talked about what they expect to do next year. And they said they're probably going to raise the Fed fund rate 2 more times in January. And I think it's March or February is the second meeting of the year, March, excuse me. So, and then they're going to leave it alone. They're not going to touch it. That's the expectation, and let that high Fed fund rate just bake and ferment and bake our economy into a recession. We're already there. There's some indication that the GDP, the GDP for the third quarter came out adjusted. We definitely are in 2 financial quarters of negative GDP. We are in a recession. So what are we looking at this week? 3 things. We're looking at inflation, the consumer, and some data. So inflation, another number, my bell's moving around here, another number coming out this week or data is the PCE, which is a key measure of inflation. CPI came out last week. PCE comes out Friday. We expect that to show inflation is still going up, but it's not going up as fast, just like the CPI showed last week and the month before. So it's starting to ease. And the year-over-year number means they have a PCE number last year at this time, and this PCE number is expected to be lower than last year's. That's a good sign. It doesn't mean inflation is going down. It means it's not going up as fast. And what the Fed's been doing all year, raising that Fed fund rate, is starting to work. It's actually starting to work. So we'll be watching the market into Friday and looking at what is going to happen with this PCE number, and it could have a positive impact on rates. So what's the second thing? Consumer. The consumer, how do they feel? Do they feel good about the economy, bad about the economy, uncertainty, fear? We've been seeing consumer numbers coming in that shows the consumer is very fearful, very concerned, very uncertain about the economy. And this week we're going to get wages and we're going to get confidence numbers. And so what we're going to, and spending as well. So is the consumer spending more money? Are their wages going up? Well, yes, the wages are going up, but they don't have more money in their pocket because inflation is eating away at their wages. So just because people are making more money on their paycheck doesn't mean they have more money to spend. They have more money to spend, but at the end of the day, it's less in their pocket because everything's more expensive, as we know. So those are some misleading numbers, and we're going to really see what they look like. Consumer confident, expected to be down again. This is a key sign that we're headed or in a recession. So we'll be watching those. And are they going to spend money this retail season? Some of those preliminary retail numbers are going to be coming out showing how did the consumer spend leading into Christmas. And then the last thing is data. It's a short week. It's a short week for the next 2 weeks. So the last 2 weeks of the year always are kind of a calm, mellow week in the bond market for a number of reasons. Friday, for example, is a half day because everybody takes off for the holiday weekend. Monday's closed after Christmas, so no trading. There won't be an update on Monday. The markets are closed. And then next week after New Year's, again, a closed week. So there's something called flight to safety. As bond traders, as investors kind of take off, spend time with family, don't spend a lot of time in the office, they park their money in the safer bond market. And this actually could be kind of a nice boost for rates because as money's parked in that bond market, rates typically get better. And they don't want to take the risk of volatility if they're not actually looking at their investments. And people take time off. We have less people in the office. So again, kind of a mellow last 2 weeks, not a lot of data comes out, and then we'll hit the ground running in January. So if you know somebody that needs any advice on their rates, if you know somebody can benefit from this video with my funky hat, please forward to them. We're going to be carefully floating into this week, watching Wednesday and Friday. Hope you have a happy Hanukkah, a Merry Christmas, and a happy holidays. And make sure you watch the remainder of this video because one of the best songs, Christmas songs I put in here, it is the start of Hanukkah today, Festival of Lights, and I think you'll all like this. Have a wonderful day. I'll talk to you soon. Bye.
Now that you might know the words too, so if you want to sing along, that would be fun. Here we go. All right, Chicago. It's time for Hanukkah. So much Hanukkah to celebrate Hanukkah. Hanukkah is the festival of lights. Instead of one day of presents, we get 8 crazy nights. But when you feel like the only kid in town without a Christmas tree, here's a list of people who are Jewish, just like you and me. David Lee Roth, Lightstone Menorah, so do James Caan, Kirk Douglas, and the Weasel Pauly Shore. Guess who is together at the Carnegie Deli? Bowser from Shanana and Arthur Fontarelli. Paul Newman's half Jewish, Goldie Hawn's half too. Put them together, what a fine-looking show! With Captain Kirk and Mr. Spock, both Jewish. Put on that yarmulke, it's time for Hanukkah. The owner of the Seattle Supersonicers, whoops, celebrates Hanukkah. O.J. Simpson, not a Jew, but guess who is Hall of Famer Rod Carew? He converted. We got Ann Landers and her sister dear Abby. Harrison Ford is a quarter Jewish, not too shabby. Some people think